Folks, we're back. It's another Tuesday. It's all interesting as we can continue our conversation in the non-QM space, what lenders are doing, what we have out there, what products we're having. I know last week we had a little scratchy with that, but we're going to got my man KJ Lens Financial. He's going to tell you about that they have to offer. We're gonna recognize why everybody's different, why some lenders gonna have more options than others, and why we have to make that choice. Because a lot of folks out here in this non-QM world knows that stuff have changed since COVID, and it's so many things going out. It's so many different scenarios. It's so many programs to where you probably don't even understand how they work, but you'll see them. And we're going to talk about some of those programs. But KJ, if you just want to introduce yourself, tell us a little bit about yourself and go from there.
Thank you, Johnny. Yeah, so again, my name is KJ, Cristianas, KJ short for that. I've been a part of, lender world now for, I would say, almost a year. It's been a lot of, changes, a lot of growth. It's a perfect time to get into business, I believe. Been learning a lot with Johnny together, been working for a while now as well. And been learning about this industry, with real estate, with mortgages, how everything moves here in the States are a bit differently. Where I'm from is from Lithuania. It's, also a different part of the world where things kind of work differently as well. So, I'm just happy to be here. I'm in Florida right now. Things in every single state as well. I realize, with all the regulations, I'm working differently too.
And KJ's in good old Florida. But KJ, we're going to start off with some questions. And this is probably one of the biggest questions that folks have is, in the non-QM world, they, it's so many different products. And give you an example, like KJ offers DSCR products, debt service coverage ratio products, which means like for your investment properties, we have programs that can fund that for your rentals but KJ's company has series, which gives you more investors they have that they deal with and how they work. So KJ, if you can explain a little bit how those series work and for those different investors and what they do.
Yeah, of course. So basically, like every single series, so we have 8 right now. We're actually looking to add more. So every series you saw can look at its own different guidelines, its own set of rules, and how differently those investors are working. So automatically they have different, different ways how they can allow people different regulations, how they allow them to qualify for loans. Some have minimum FICO, let's say 660, other can have 620. Some accept 1007, some accept, leases or all kinds of different things. So when it comes to that, basically, to simplify it, the way I would look at it is simply a different way how to do a loan. Usually a lot of lenders, when you try to do a loan with them, they might have only a few investors, which if you're doing with them in-house, if you need to make a change, unfortunately, oftentimes you have to change the lender. With us, since we have so many different choices, if let's say, one series can have a requirement for 3 trade lines, another series can say, hey, if you have 3 different FICOs for 3 major companies, we're gonna waive the trade lines. You might not even need to use them, or at least 2 or less. So I just simply look at it as more flexibility and more different ways how you can skin the cat or simply do the business, so you don't have to go anywhere else. You can stay within the house.
Right. And that's so important because like KJ said, sometimes you have a scenario and everybody changes in the middle scenario. You might have a renter and then all of a sudden you're closing and that rental leaves right there when you start to do the loan. Now that investor might require you to have somebody in place at the time of the loan, where another investor said, we don't care if you got a tentative tenant coming in, we'll still do the loan for you. So as lens go, they can switch that from that series 1 to that series 2 to that series 3. It just depends on that lender and that investor that they're going to sell that loan to, and they gotta have all that information and make sure that you give them the best type of thing. But KJ, also, could those series difference in interest rates as well?
Oh, of course. So automatically when you think about, okay, if I'm asking for more requirements, then or versus less, something with less requirements or more flexibility might in return have higher demands as far as it comes with a higher cost. So also that's something to consider. Of course, if you have all the documents, if you have all the things that are they require, that oftentimes can be more cost effective for the borrower,
Hmm.
since if you're able to present everything that's being asked, then
Hmm.
you have more options, because automatically if one lender is asking that, most likely another lender going to be asking for it as well. So in that case, if we have less documents, or sometimes even people either they're buying a DSCR investment property, where they might not have a renter, a person that's renting there already, so they're buying a property that's vacant, that's empty, and we gonna go based off other properties that are around, and determine how much potentially money they can make off the property based on
Hmm.
comparing the properties around. uh, but anyway, to answer your question,
Yeah.
uh, if they have less requirements, some things that might be more pricey.
Yeah, yeah. So you got to look at if you're getting less, your rate's probably going to be a little bit higher than somebody that's getting a full, almost a full doc loan versus some, getting a partial loan on this as well. Something that lends to, you can have a late payment, and they have investors that work with that, and you have to make sure that it's just 30 days for it. So when you go on there, you have to look at those type of scenarios, that if somebody's doing that, or if that's the case, you have to consider that for that, if they're going to get the loan done. If they way above that, they probably can't do that, but that's an exception. Usually when you're refinancing a property, you can't have any lates. That's a that's a that's a situation that Lens is able, and probably give us a little more in depth of your DSCR programs, KJ, of what y'all offer for them.
Well, of course. So for DSCR, since you mentioned late, I'm just gonna piggyback off that. But so a lot of investors too, or a lot of lenders too, have, if you have 30 days late, you might have a limit to that.
Mhm.
Maybe let's say two 30 days late without a year, as long as you're current with your payment this month when you want to do a refi or a purchase. So with us, out of all the investors we have maybe one or two that allows unlimited 30 days late. So if
Mhm.
you were late, let's say 6 times throughout a year, as long as it's not back to back, which is called rolling 30s or potentially 60s or 90s, with just 30 days late, you can have multiple and unlimited of them,
Mhm.
and you can still get funded. Of course, you have to keep in mind, the more 30 days late you have, the pricier is going to get, because
Mhm. Mhm.
when you think about, if I'm lending you something, it's going to be more risky if you have a history of being more late. Sometimes, if you were late once, and was a mistake, or you paid it off right away, or you forgot, or anything like that, you can sometimes work with your creditor as well to ask them to remove that throughout the process. So that's something they can fix too, and that can lift that issue as well. But some of the things that we do, there's also no deposit sourcing. So sometimes you might have large deposits come into to your bank account, and you still want to buy a property. So that would not come up as an issue, because there's no sourcing. Uh,
Mhm.
30 days late sourcing. There's a few more things that actually we really stand out of.
Mhm.
Besides, there's no ratio DSCR, so it's something, if let's say your mortgage is a certain amount, let's say $1,000, for example,
Mhm.
and you expect to make $1,000 of that property, so that's called 1-to-1 ratio. If it drops under one, or even under 0.75, which, let's say $750 you're getting income, and $1,000 is what you pay for mortgage, it becomes under ratio, so paying out of pocket. So it puts a strain, and it's harder for you to start making the mortgage payments, because you start paying out of pocket. If it drops below 75, a lot of lenders wouldn't touch it. We still do. We go all the way to zero. So we do zero ratio. So you might, show that you might not be able to make anything out of property, or the ratio doesn't make sense. We're still gonna help you finance it, and to be able to get their hands on the property. There's a very few reserves that is required of that. Also, we are allowing vacant properties, as I mentioned earlier. Besides that, we can go rural properties as well, up to 20 acres. With exceptions, there's I'm sorry, rural basically is, when it's I would say in the middle of nowhere, if
Right.
nothing around, or there's very few properties that is hard to compare. Let's say you have, a duplex that has, let's say two bedroom on each unit, or whatever the case might be. And if you can't really find exactly the same type of property in the area, or it probably pretty far from there, let's say 5-10 miles or whatever it may be. If it's somewhere not close, it's hard to compare. So if they don't have anything to compare, there's a higher risk, because when the time comes to sell, or if you want to do something, then it can get tricky. But we allow up to 20 acres in rural areas, and it actually can go a bit above that with exceptions, which actually just recently had a similar scenario that was, I think, 23 and a half acres.
Wow.
And we were able to find funding with exceptions and everything, because sometimes that's what lender work there, try to find ways, go above and beyond to be able to work and make things happen. And sometimes it works out, sometimes it doesn't, because it a lot depends on the investor, whether they have that wiggle room, depending
Hmm.
on the market as well. So yeah, but that's a little bit on that.
Hmm. One of our questions is, KJ, how do a non-qualified mortgage differ from a qualified mortgage?
So non-qualified mortgage is something that, it's not conventional. It's not FHA. It's not something, like Fannie Mae guidelines most of the time. So, or at the same time, if you have not W-2 or not standard doc, not something regular income that you would have, if you're not fully employed and, you get a regular income,
Hmm.
that's, with that, it's easier to get a loan. If you're self-employed, let's say, let's talk about if you're a mechanic, if you're truck driver, if you're have your own business that has not stable income. Let's say one month you make $100, the next month you make 1,000, the next month you make 5,000. That's something that has very big difference and variety every single month. So that's something that you might see if you're not stable. So Fannie Mae or conventional FHA or VA, might look at as, okay, that's something that would be too much risk or whatnot. So that's where, of course, with them, you're gonna get very good rates, very good prices. Where first time homeowners most of the time goes for that, or for conventional instead. For non QMs, because it's literally non-qualified mortgages, it's something that a person would come with where they were not able to qualify, or most of the time it has to do with investment properties or large loan amounts. Um, so really, depending on where you find yourself, if you have a regular income, if you have multiple sources of income that you can qualify for that, or you're looking for different options how to use your income to be able to qualify for real estate or for mortgage loans, that's where non-QM comes in and makes things very flexible for the borrowers.
Yeah, it's a wonderful product because we know that during COVID, we had a lot of self-employment folks. We had a lot of folks that wanted to get in investment properties, but they didn't have the tax returns or all those different type of means to finance that. Non-QM came and said, "Hey, we're here. We have a different program. We have a different strategy that's going to be able allow you to get in here and maintain that property and to keep growing from it." Next question, is a non-qualified loan the same as a non-conforming loan?
So it is a little bit different.
Hmm.
I guess, again,
Yeah,
depending on where you be, from which side you try to approach it.
right. So I think with the non-qualified loan, the non-QM loans is going to be a little bit different from the non-conforming loans, which is you're talking about Freddie and Fannie Mae guideline versus a non-QM product, which is a total different product. It's a government product and a non-government product that they have to follow the guideline for. So when we look at the non-QM lender, as with KJ's company, we're looking at people that don't have government source, and these are other type of source of investors that want to invest in this property or fund that property. Unlike you have to go through Fannie Mae guidelines to qualify for that loan, where Fannie Mae might tell you, for example, that you have to be employed for 2 years. you know, KJ don't care about your employment. He want to know that there's somebody in there to pay that mortgage every month to,
Yeah.
to get that funded for it, so that can be your source of money that you got to repay the loan. Anytime you step outside that realm of Fannie Mae, you're more than likely on a non-QM side here for those type of loans. Those are the loans that a lot of folks out here that's getting into investment, they use it right now. It's a bigger form because it's less documentation. Are we getting 100% FHA or conventional rate? No, sometimes we beat conventional rates um,
Yeah.
by what we have, so you got to remember that. But you have to follow the criteria that the investor is going to set forth, and they're going to have it. Their underwriter is going to review that file. Then they're going to have that criteria of conditions that come back for that investor. If that investor don't like it, we can say, "Hey, KJ, do you have another investor that we might not be able to show 6 month reserves, but we got 3 months reserve? What investor can we go to?" He might say, "Oh, we go to Series 3." And so we have to switch the program where you might have another lender say, "Well, we don't do that. You got to find somebody else to do it for it." So that's the
And
thing. And go ahead.
No, and it happens, yeah, of course, but I feel like, oftentimes, everybody, or all the investors mainly look like, ATR, ability to repay.
Mm-hmm.
And that's one of the main factors that you try to, verify and see. And of course, conditions going to come. And as Johnny mentioned, with reserves, everybody looks very differently, have
Mm-hmm.
different requirements. And it's very useful when you have multiple different choices to be able to do that and leverage that. Um, and yeah.
Yeah. What is the minimum loan amount, KJ? They said that you're able to do.
So with us in house, the minimum loan amount is $100,000.
Mm-hmm.
So think about, let's say, if it's $200,000 that you're purchasing a home and you want to do 50 LTV, 50% loan to value. So half of that would be 100,000. So that would be our minimum. Um, Sometimes we can try to get an exception to go under that, but
Mm-hmm.
usually that's somewhere between 95 and 99 is sort of the very minimum. If we do have actually a program that is like a blanket loan, it's called cross collateral. So if it's in the same state and you're buying multiple properties at the same time, so the minimum for that is minimum 3 properties, and we go up to 25 properties. So you're able to go to a minimum loan amount of $50,000 per, per all property. So let's say if it's 150,000 total, or one costs 100,000, the other costs 25, and whatnot. And that way we take by average. The minimum would be 50,000.
Wow, and that's good to know. So $100,000, and they're talking about blanket loans, which is huge. A lot of companies don't do it. Tell us a little bit more about them blanket loans, KJ, how they work.
So blanket loans with us actually is financial too. It works like the SCR loans.
Mm-hmm.
Um, it's simply you combine all the mortgages basically and put in one. So you pay average, average price would be on every single, you combine all the properties, all their loan amount, and you pay whatever percentages for one property, it applies to all of them. And you pay one mortgage for all of them. Instead of paying, for 3 or 10 or 20 different, mortgages, you have one mortgage for all those three properties, or 25 properties, or, whatever you're looking into.
So the benefit is one loan that you have. It covers several properties, and it covers that. Do it cover all the taxes on those properties when you do that, or how does that work? This next question.
So as far as taxes, again, it's if we're talking about property taxes, then
Yeah, for the loan, for the blanket.
so for every single property, they would have individual taxes based on that. But as far as mortgage, you would pay basically the amount every single month, kind of combined and divided by equal amount,
Mm-hmm.
as a whole.
Oh, and that's perfect. So you still paying the taxes, but they're splitting up the taxes payments for you. So when taxes come, they can take care of that for your investment properties. You don't have to worry about that paying the taxes separate from making a mortgage payment. All that's going to be covered in that. For and something KJ stood out is the rural lending. Somebody said not a lot of folks lend on rural areas. What is the criteria? Is it a certain amount of acreage, or how does it work?
Yeah, so rural areas, again, if it's can be somewhere, in the middle of nowhere, but for that, usually, again, if we do DCRs,
Hmm.
so we have a limit of acreage up to 20 acres, but
Hmm.
rural would be, somewhere, um, let's say,
Undeveloped,
well,
undeveloped.
either undeveloped, yes, or
Hmm.
somewhere, when they have a lot of lands and it's really spaced out, and
Hmm.
there's not, yes, not very developed, or
Right.
simply also there's people own a lot of land. If they have a lot of land and one house there or multiple units, or however they're running it, oftentimes people might refer to farmland or things like that. And you want to be careful with that as well, because sometimes people are running nurseries, for example. It's very common to be in a rural area for nurseries, where they have large amounts of lands and they run a business already there or whatnot. So a lot of lenders are focusing to do, just as investment property, but not necessarily for doing business there, whatnot, not commercial, because then you're in commercial side of it, right?
Right. Right.
um, but looking more, as again to residential, renter for residential. We do mixed use, which is kind of closer towards that. We're able to have. I like to use example often as Whole Foods,
Hmm.
because if you go to Whole Foods or any other supermarket, if they have that, if they have a storefront, a marketplace in a first floor, and
Hmm.
above them, you're going to see units, residential units, where you might have a garage in the back somewhere or a parking lot or something like that. And they have residential units upstairs, and downstairs they have a marketplace, or vice versa, however they work. So that would be
Hmm.
mixed use. So that's something, that cool product we have in house as well. For that, we are able to do mixed use up to 8 units as well, 2 to 8 units usually. So let's say two to eight apartments above, and the bottom can be a store, whatever store might be a fishing store or gardening store, anything like that. Um, so yeah, that's
Next question, somebody's asking, do y'all do like plazas or strip malls?
so. I would love to get into that side. That becomes, a larger commercial business. Of course, there's automatically more business to do in that space.
Mhm.
Different amounts. Currently, not. We're also um, pretty young company in this world. Now, I
Mhm.
cannot say we're a startup anymore, because we launched in 2019, and we kind of restructured a lot of things here as well. And lately, we've been growing and adding more products and more things. Um, I would love to get into commercial, and with Johnny, we were talking just the other day too, about fix and flips and
Mhm.
different kind of businesses like that. And we're looking into expanding for sure in different areas to add, because again, in any market that you always need to learn how to adapt. You always need to adapt to the markets, to its demands, to its needs and whatnot. And that's how you survive and hopefully thrive, right?
Right.
Um,
For,
but
oh, man.
yeah, but currently, when it comes to plazas or marketplaces, we don't do that currently, unfortunately. But hopefully in the future, fingers crossed, we'll get there.
Right. What about mixed use? Somebody said, what about mixed use properties?
Yeah, so mixed use is something that we were just talking about. So we do mixed use DSCR as well. The same principle as we buy a property that you might lease and might have a mixture of commercial and residential. So basically, 51% at least of it would have to be residential, and 49%, close to 50, just under 50, would need to be commercial. And oftentimes that go based on square footage and how the business is run and whatnot. But yeah, so I would say two or three units would be residential rentals, and then one unit, it would be 2-to-1 ratio. So and then
Mhm.
as well as the percentage requirements. But
Right.
yes, we do mixed use, two to eight mixed use, 2 to 8 units.
So that's good to know. So you have a mixed use outlet right now because a lot of it's hard to find a mixed use lender
Mhm.
because a lot of folks don't want to do it, and especially 50% which is a good ratio here for it. So for all y'all folks out there looking at mixed use properties, consider that. We'll have an avenue that we can put that through so we can um, make it work. For A there, Miss Isabel. But this is a big one that a lot of folks don't touch bases is the P&L. KJ, give us a little back story on that P&L, how it works.
So besides DSER, to be honest, I have some favoritism. Okay, it's like you have when you have multiple different programs, like having multiple different children or pets or anything like that. Not that I'm comparing, it has different value. Different investment you have to make, right? But I kind of treat them also a bit separately, not
Mhm,
not all them equally, because PNL, it has, at least with us, it has less requirements as well. So for our, we have pure PNL, and PNL is profit and loss. So basically you have a business, and you have profit and loss throughout every single year. And usually if you have a business for at least 2 years, or
mhm,
if you're in that industry, that even if you haven't had a business before, for at least a year you were in the same industry that you opened a business at, we're able to do a loan with you without you needing to present bank statements. So what that means is that you only need to have either a certified public accountant, or a CPA, or PTIN, which would be a tax preparer. And PTIN is also a lot of fun because that's quite flexible. Uh,
mhm,
you can also get approved by them. Basically, they prepare your profit and loss. They say we prepared your taxes, we prepared your all the information, and this is how much you're making, and they present it to us, and we go based off purely no bank statements, nothing, just profit and loss statement, and a letter from either a CPA or tax preparer or CTC, or any of other person that has their license, that they prepare that for the borrower. So with that also, we go on a higher LTV than we would in the SCR. The minimum FICO would be 660 for that, not 620 as like the SCR.
mhm.
So it has a little bit requirements from that to qualify, but it can also be pretty simple to get, with less documents, like no bank statements, because with bank statements, we have to verify, have to go through everything to see the expense ratio, what exactly qualified, the debt to income, ratio and whatnot, the DTI. So, but yeah, PNL would be, I would say, between for a national program that we have and profit and loss. So yeah, and that kind of brings me to foreign national. But
Wow, that P&L. So we're talking about just a profit and loss statement for how many years? Is that like a 2 year you have to be in business?
so you have to be for 2 years in a business or in
Mm,
the same line of work, and at least have a business for a year. But usually minimum is 2 years to have a business. That's, unless there's exceptions or some other things. But you have a business for 2 years. Again, you're self-employed, you're running your business. You want to have majority ownership of the business if you're going to take the loan on the business, because you can also close through business, not just individually. You're always going to be a personal guarantor. Of course, if something happens to the business, something happens to the loan, you have to have as an individual, as a behalf of your business, when applying to guarantee that you'll take care of it. But besides that, yes, 2 years self-employed in that business, 2 years established business, and you can use either 12 months if you like, which is 1 year, or 24 months of the profit and loss statement.
wow. And what's our loan of value on those type of loans?
So loan to value, we can go for purchases, let's say single family, primary, up to 85 LTV.
Wow.
For investment properties, 80 LTV. So that's, going minimum would be 25% down. Sorry, actually 15% down, 85 LTV. So from
Mhm.
15% down to 20, 25, and so on, depending again on FICO, depending on the DTI, debt to income ratio, which comes from analyzing the P&L.
Wow, wow. So that's still good, for using that for those folks. What about season funds for that? How does that work?
So season funds, usually on P&L, it has to be at least around 3 months.
Mhm,
Um, I believe sometimes it can be 2 months with some exceptions. That's where it can get a little bit different, because on DSCR you have no seasoning,
mhm,
so oftentimes that can be very helpful. Uh,
mhm.
but yeah, with profit and loss, sometimes it have with seasoning a bit more requirement.
So we got 660 credit score, which is still great
Mhm.
for it, and then we have the 3 to 6 months of bank statements showing some seasoning with it. But folks, like you see that it is so much less documentation that you're dealing with when you get those type of loans. And for those type of loans, they're beneficial to you when you don't have the documentation necessary to do your normal DSCR or your other investment loans. KJ, go back. Somebody was talking about the 620 credit score. How does that work for programs?
So 620, basically that we have a few programs that we're able to do that, which one of them is the investment properties for DSCR. That probably would be easiest. We do bank statements for 620 as well, but keep in mind that, if let's say we have 20% down, which is the maximum for DSCR, it's not going to be correlated to 625. So the lower the FICO, usually you're going to have to put a higher down payment.
Mm-hmm.
So that's something to keep in mind as well. So I think for 620 right now might be for DSCR program for investment properties with the rentals, might be 65 LTV. So I think that's 35.
50%. Yeah.
Yes. You want to
For
think about it as well. For bank statements, again, for bank statements, there's always, more review because we have to automatically go by 50% ratio, but for that also 620 FICO. Um, There's a few more programs that we do lower FICO, full doc as well. Full doc is regular as you would go to Fannie Mae, have your W-2s,
mhm.
but there's no tax returns, or pay stubs, so which is good. Um,
And which programs are those, KJ? Those if you can you go lower than 620 or is it programs for that?
So currently with us, 620 is our limit. I wish we could go to, 570 or 580, not because I know a lot of times, people are, trying to get out of renting or trying to get out of, there are other, situations that they're trying to buy investment properties and they want to kind of start putting money in somewhere that creates them equity or value that they can use later on for whatever reason might be. Uh,
Mm-hmm.
and yeah, but currently I think currently we're at 620. That's the
Wow. That's still a good score for investment property. You talking about 35% down with the low credit score to get a deal done, to make it happen. It works perfect. We got the P&L. Tell us a little bit more about the bank statements here. Our credit scores, our criteria right there.
So bank statements, the good thing about it, that compared to PNL, let's say, so PNL, no bank statements required, but we can go to 85 LTV. With bank statements, we can go up to 90 LTV, which is just 10% down.
Mm-hmm.
Of course, it sounds just, but I guess I'm used to saying just because it's non-QM world, it's quite good. Uh,
Mm-hmm.
Compared to conventional or FHA, yeah, it's 3.5% or 5% or 10%. It's quite common, but in non-QM, 10% is with bank statements is really good. Uh,
Mm-hmm.
the minimum will go 620 FICO with that as well. The good thing with us too, there's no trade line requirement with 3 credit scores. So if you have, for 3 major companies, the credit scores when the credit is being pulled from you, um, then that basically you don't have to have a special seasoning, for using your credit cards for a certain amount of time. Um, you can do business or personal bank statements, but
Mm-hmm.
it will have to be one or the other. In some cases, I think you can get exceptions. We can use a combination of those,
Mm-hmm.
business with personal. Then there's usually, we have a cool system in house where you can submit your bank statements on our website, and we
Mm-hmm.
have a team dedicated that literally calculates within 24 hours and comes back with you and gives you a report of all the expenses ratio that we have done, and based on your bank statements, and they're able to determine of how much you qualify for. So they do sourcing on bank statements, they do sourcing on the funds. Let's say you had a large deposit of, I don't know, 5,000, 10,000, 50,000, whatever it was.
Mm-hmm.
So they might, ask to verify, okay, receipt, or was it from, if you made, a big sale or purchase or, whatever it might have been. Or somebody sent it to you or gave you a gift or whatnot, that also happens often. But usually we take 50% ratio. So let's say if you're making, again, let's say $1,000 a month, So it would qualify for 500 because we assume that expenses takes at least half of your paycheck, right?
Right.
And the cool thing too with that, you can get a CPA letter.
Mm-hmm.
If you do want to go beyond that or above, you can get to 70% to 80%. I think all the way to 85, and with the CPA explanation. So you would get a CPA and a certified public accountant, and they would go through your bank statements as well and verify. Okay, I see that now these charges has been made for certain things that actually does not go in expense ratio. It wasn't an expense; it was something else.
Mm-hmm. Mm-hmm.
And they're able to list it down and help to bump up their ratio. So we might get up to 700, $800 a month, of income.
Oh
Uh,
wow, wow. That's good for banks. And what credit score do we need for that, KJ?
so minimum credit score for bank statements with us is 620.
Wow, 620.
Yeah, so that's one of the other options besides the SCR.
Yeah, yeah. So, folks, that's nice. Tints of Light is tuned in with my feel good environment. Good to see you. What does experience score? Why does experience score higher than TransUnion and Equifax, and why isn't experience used more often? Um, so KJ, which credit bureau do y'all use, or just the mid score?
So we usually the mid score. So those three, Equifax and those three different companies that they listed. Out of all of them, we take the medium one, and the one in the middle. So that's what we go based off. So let's see, sometimes the FICO might be 660, 640, 620. So we go on 640.
Mm-hmm.
As well, another recommendation I would do, if sometimes people might apply for mortgages that have a spouse or have somebody with that they want to be on a loan together,
Mm-hmm.
and if one person have a 680 or 700 or a higher credit score that the middle score would be, and the other one might have a way lower, think about this, that it's gonna cost you more. You're gonna get automatically a higher rate, if you go together. And that's something always I recommend couples to consider, because if you are able to put just one person on a mortgage, guess what? In about 6 months, in a year, if the other person improves their FICO, their credit score, you can actually get them refinanced together if you want that. You can do rate and term. You can get a better rate then, if both of you are higher. But when you can do that as well when you start, but you can still be on title,
Right.
nonetheless. You can still add the other person on title, so you both have ownership of that, which is great. But
Right. And Nicole, I want to answer her question. The reason that we have that some are higher or lower is it depends on the reporting of the credit bureau. So how they report and when they report tells how they keep a record of it. For if experience higher than Equifax or TransUnion's always in the middle of them both. It's just a reporting requirement of those, and it depends on which one the bank uses that they go by. Some lenders, as KJ was mentioning, they use the middle. Some lenders might only use TransUnion, or some might say they only use Experian because they feel that they have the most accuracy when they're doing their loans and stuff. And sometimes that's not correct. Had another question that came in. I have a cannabis business. Can I apply for a non-QM loan?
that's a business. So as long as you're able, to have profit and loss, or even bank statements, you still have income coming in. You're still making sales, whether it's cannabis, whether it's any kind of other business. You're still producing income. And again, ability to repay, ATR. That's usually the most important thing that all the lenders going to look at. And if you're able to show that you're able to make payments,
Mhm,
that's already a big thing that you don't need to worry about.
mhm. And on that P&L, when you calculate an income, do you just go by the deposits, almost like the bank statements, or how do they calculate that?
So in the P&L, usually either CPA or public, tax preparer, actually P10. Uh,
Mhm,
they go based off, again, income. It's similar like reviewing your taxes, reviewing your they take a weight on all of that. They're reviewing your full business expense and income. Let's say if you're running a trucking business, right? Automatically, you're going to have expense on a truck. You're
Mm-hmm.
going to have expense on running your business, of membership, of putting fuel, or having insurance, and all those things. So usually they put all that in consideration, and maintenance of the truck as well. And your income going to be picking up shipments, dropping off, and all that, and getting paid for that. So they go based on that ratio of your income versus your expenses. So
Mm-hmm.
as long as your income is higher than your expenses, the higher it is, the
Mm-hmm.
higher, again, debt to income is going to be as well, because you're going to have a way higher income. And then when you compare it to your mortgage payment every month, that's what you're going to go based off. If you're able to make more of income than your expenses are, including the mortgage every month, then you're pretty good. And sometimes, people might have, credit cards that haven't paid off in a while. I have that as well, that you want to pay off, and you're working towards to. So in order for you to sometimes to get a better qualification, or to qualify for better debt to income, comparison, you want to pay off some of those credit cards. And sometimes we do it throughout the process too with some of the borrowers, and that help, to offset the DTI to qualify. Um, and yeah.
Yeah, so that's interesting. You got to calculate your expenses when you're doing your P&L for those type of loans, because even though you have those deposits, they still got to calculate expenses so they can make sure that you're able to repay that loan.
But keep in mind, that's just business expenses, not personal expenses.
Business expenses, just your business, not your stuff that you do at home, which is a good point of reference that we have for we know a lot of companies do the bank statement loans and stuff, but a lot of them don't go down to 620. When they do it, they want a certain number, um where they go to with that, for those type of loans. So we got that non-QM side of the thing with the bank statements, the P&L, the DSCR. Anything we missed there, KJ? Or
Well, one that is one of my favorite as well. So DSCR, profit and loss, and I would really like to mention foreign national. So foreign national is something that, myself being from a different country, and having friends or family, or anybody else that come in and right away click. A lot of people from Latin America, from Venezuela, they're not able to qualify because
Mhm,
lenders don't accept that. We do. We accept pretty much most of the countries.
mhm,
So imagine this: you have a foreign passport, and you want to buy investment property in the States. And oftentimes you need to have a visa, you need to have FICO, you need to have some sort of proof again, to show ability to repay.
mhm,
Um, how we work with foreign nationals, and we are based in Florida, more specifically in South Florida. So we have a lot of people from all over different countries, whether it's Latin America, whether it's Europe, whether it's anywhere else.
mhm,
And you're simply able to qualify as a borrower with having your primary address in your foreign country, having
mhm,
your foreign passport, and having a down payment.
mhm,
That down payment that you can show is from your foreign country as well, in your foreign bank account.
mhm,
So with those three things, simply down payment, foreign passport, and showing a primer in that country where you're from, can qualify for you to get investment property, which would be DSCR, again, to buy investment property in the States. Um, and I think that's a beautiful thing, because imagine you're living in another country, and you start renting something here, and a lot of people wants to come to the United States and make money and do all those things, and without you needing to live here, a lot of Canadians do that, and as well, that without needing to live here, without needing to have any papers here, without needing to have visa, FICO, without needing to have any other documentation. Again, no deposit sourcing, no credit reference letters, no asset seeding in the States. That's another big thing. You're able to qualify to buy an investment property and to start making that additional source of income.
mm. So that our foreign nationals, still can buy those investment products that they have available. And tell us about your loan of value on that and your credit scores, or how does that even work for that?
Yeah. So again, there's no FICO, no Visa, no none of those things. The way it works, basically, you show either 6 to 9 months of reserves in your foreign bank account that you're able to make payments.
Mm-hmm.
Um, you basically, hmm, just trying to think how to put in a best
Make it
way.
plain.
um, the way it works again, you basically qualify based on your foreign passport. So imagine you're buying a property without having proof that is already making an income. The same way as DSCR works, just
Mm-hmm.
with less paperwork.
Mm-hmm.
So uh, you show your passport, you show your primary property. Not even that. You give an address of your primary property in your country,
Mm-hmm.
and you show the reserves from your bank account in your foreign bank account, and you're able to qualify. So there's no FICA on none of those things, and you qualify again based on uh, the DSCR ratio. If
Mm-hmm.
it's 1 to 1, that's great. So you qualify based on potential income of the property compared to properties around where you're trying to buy. Um,
Mm-hmm.
and for foreign nationals too, you can go below 1. You can go, all the way to 0 as well. There's no ratio as well. Um, but as far as LTVs, you can go to 75 LTV, just doing the SCR. If you do have a business, a lot of people have businesses in the United States without living here. They might be in another country. You can go to 80 LTV still. You can still put 20% down. If you had a successful running business which provides income, you can do either profit and loss, or you can do bank statements and still buy a foreign national program asset or investment property in the United States.
Mm-hmm.
Um, there's no FICO, there's no Visa, there's no deposit sourcing, there's no asset seasoning, there's none of those things. And sometimes, I think that it can be even easier for foreigners with foreign passport to buy an investment property in the States than it is for people that live here. Uh,
Mm-hmm.
that's something that I have, experienced or saw. I know that it is an easier process, that they don't have much to show, but they're able to have investment property. They do, in fact, gonna have to do sign, an affidavit that okay, neither us or family is gonna be able to stay there, but you're able to buy investment property, and whether you're gonna rent it out to, friends or somebody else, it's up to your disclosure.
And they don't have to live in the United States.
Nope, their primary address, wherever they're from, yeah, and you're able to buy investment property just like that.
Wow, that's amazing. So we can have folks that's over in the Caribbean, South America, um, that can do that. That's a lot of documentation that foreign nationals have to do to qualify for that. Is it a lot of documentations that they got to provide?
Foreign passport.
Yeah, for the qualifications.
Mhm.
Is it a lot of documentation that they need to provide for that?
So most documentation is gonna come. It's not gonna be for your personal qualification, which is foreign passport, to type in your address where in your country from your foreign country, to show the down payment and to show the reserves that you're gonna be able to make those payments. Um, but no, there's way less paperwork. The most documentation is gonna come is not gonna be from your personal qualification as a foreign national, but it's gonna come from whether title company, what they require, or if you're buying a condominium. Now HOAs might have their specific requirements. So I would say to look if you're looking for new develop or new buildings, or if you're looking for single family. Usually single families are easier to close. Uh,
Mm-hmm.
but yeah, if you're looking purely for foreign national, again, it's going to be investment property only. Uh,
Mm-hmm.
and yeah, as far as personal documentation or qualification, no visa, no FICA, you just need foreign passport, uh,
Mm-hmm.
and show that you're able to make payments, and that's it.
Yeah, and the question was, it's a lot of documentation that foreign nationals don't need to show to qualify. So, what steps do y'all take to protect that? To know your customer, the protocol, so we have a good loan, we have a legal loan, that we
Yeah.
process.
Of course. So I mean, there's steps always are being taken. The measures always being taken, and we have a whole compliance department and everything. They verify everything, and we do check something for foreign nationals. It's called an OFAC list, and that's on our government page in the United States. And we run people to see if they have, if either that specific country. But even within that country, if they are on OFAC list, let's say Venezuela, for example, um,
Hmm.
if the people are not on the list itself, the individual, the borrower that's looking to buy property, we're not going to have any issues with that.
Oh wow, wow. So yeah, y'all still have to look through OFAC to make sure they clear, which is good.
Yeah.
To make sure that we don't have no illegal activity going on there to protect that. But that's foreign nationals out there, folks. We have some properties that might seem like it's unaccomplishable, but it's still other means to finance these investment properties. It's so many programs out there. There's so many different options that we have that we just can't say it's no way to do it. It is a way. This creative financing with JB, we're gonna find a way. We're going to find a solution. We're going to find that lender that's going to be able to meet that need and see how we can get it done. So you heard us say something repeated times. Is credit score is important. Foreign nationals don't have it. They probably won't have one anyway. But we have the finance capability of what they're going to loan you. The bank's going to loan you. So you're going to need some money, folks. You're going to need some monies that's put up for it. We even talk about cannabis, which is a new market out here. We see a lot of these smoke shops coming up in the area and stuff. That and KJ, I mean, how does that work? I mean, so many of those smoke shops and stuff like that coming up and dispensaries, is that getting to be more common now for financing?
Yeah, of course. So, I mean, a lot of people, would look, medical cannabis, or, they have those dispensaries that are for medical purpose, or in every single state, can be, different type of use. But um, again, you look at it as income, you look at it as a business, if it creates value for the people, if it's, helpful, if it's useful, if people are actually, going there and creating some sort of, how do you say, um,
Revenue.
revenue, yeah, revenue margins. And if that makes sense, regardless, it's, you're running a business.
Mhm.
So if you're able to create the, profit and loss statement, you're able to qualify.
Mm. So yeah, that's the key right now. Creating that profit and loss, having a good tax accounting, tax professional prepare those documents for you, and have all the things in detail for it. I know that you just got to be able to have that money deposited into an account. So we don't know about the account that's able to manage that because some banks don't do it when you have that. Regarding a U.S. citizen that wants to make a purchase of real estate in another country, will the same rules apply? Can y'all do international lending as well?
Oh, it's so funny because somebody just asked me yesterday that. So somebody from Canada, actually. So we currently don't, lend internationally.
Mm-hmm.
I wish that would be a lot of fun, but also, there's a completely different ballgame in other countries. And
Mm-hmm.
uh, I also have people, ask from Canada, because they have a Canadian FICO that they want to, buy a property here, that you want to use it here. We also currently don't do that, but um, I hope to see, in the future that we'll be able to add that and do, because again, it opens more doors and opens more opportunities for people that they're able to buy whether investment or primary, which is amazing. And think about it: if you have the income in the United States and you can buy property in another country,
Mm-hmm.
I would love to buy a property in somewhere Caribbean, an investment property, and rent it and have a loan here, qualifying based on income here. Um,
That
so
that'd be beautiful. And tell me, and I don't know if you know because I don't know. What's the difference in Canadian social and U.S. citizen social security number? Is it the same or?
So I think it's calculated. I think it's either the same or almost the same. Because I was just talking to this investor the other day that they were looking to do that, and they want to expand it. They have some properties in ICs, already. And we were actually having this discussion a little bit, and seems like it's being viewed as almost the same. And some banks in the United States,
Mm-hmm.
they might allow that. And Some others, they might look okay. Well, it's a foreign FICO, it's very difficult to compare. But from what I saw as far as difference, they're very close. They're either very close or they're almost the same. How it's being calculated, how it's being viewed, how it's being used, and whatnot. So, uh,
Mm.
so yeah, there should be a very small difference with that.
Yeah, that's interesting. So I take it they have three different FICOs. Like do they have like Experian, TransUnion?
So either they have those, some of those companies they do, and some others they would have equivalent, but they do some of the major companies that would have here as well. Which would you think, okay, if they have those same companies, why would we not be able to use that, right?
Right.
Um, I think more has to do, as well with, I would say, political or
Mm-hmm.
more different, governing policies.
Policy, yeah.
Because if it would be a completely open trade and open everything, then
Mm-hmm.
that would be an interesting thing. Uh,
Mm-hmm.
and uh, and yeah, but
This is a question. Can we use a bank statement loan to do cannabis?
banks ain't allowed to do cannabis. What do you mean by that exactly?
So can we qualify with bank statement loan? Can we qualify with bank statement loan to do a cannabis to say if we wanted to refinance the building and the store or whatever?
So with us in
Mm-hmm.
house, exactly, no, because we don't really do commercial.
Okay.
We don't do businesses per se. We do residentials only. Uh,
Mm-hmm.
unless it was mixed use, if I would think, if let's say first floor there's a store running and upstairs there's a residential. When it comes to mixed use, up to 8 units, that's something we could do.
Oh wow. Up to 8 units. That's good. To have it. A lot of folks, because once you get out of that 5 to 8, people consider it commercial. They don't touch it. So we can do up to 8 units here, which is an awesome opportunity to get that, folks. But we heard some good stuff tonight from KJ and Lens about the non-QM, the DSCR, all the series is up to 8. KJ, is that where we're at?
So both regular units, residential goes to 8, let's say apartments, and also mixed use goes up to 8 units as well.
Right. And then they have 8 series, which mean we have 8 investors that we get to, that they can see which investor would want to be able to purchase that loan once we do a transaction, which is huge. It's more than we can imagine that's going on. So you have a lot of options here for bank statement programs. We have the P&L, which a lot of folks, they probably ignored. They probably seen the letter. Oh man, I see that, but I don't know what that means. But we have that type of financing as well. We got the I-10, which is a huge program for foreign nationals for it. So, folks, we have so many things out here, so we can get into this investment market, so we can start financing those properties more and more each time for it and stuff. And it's just a pleasure. I want to thank KJ for taking some time out today to
Thank you
uh,
for having me, man.
to spend that with us. And if you have some last words for us, KJ, you can let us have it.
Of course, and I mean, what I would, say, there's three things in life you cannot undo: action taken, word spoken, opportunity missed. And I think I'm grateful I had this opportunity to have you here today with Johnny and share some information that we have learned, that I have learned in a little time, and as well learned from Johnny a lot throughout this industry. And you know, feel free to reach out to Johnny, to me, and we'll put our heads together and make something work for you.
We'll figure it out, folks. Man, it's been a pleasure again. We got into the to the investment side again. This is our second week. We're gonna keep growing. We're gonna keep learning. But creative financing with JB, I'm going to tell you, where there's a will, there's a way. Let's figure it out. Let's go ahead and take that responsibility to go to the next step, to increase where you're at, to go to where we haven't been before, investment properties, and making sure that we be intentional about it. If foreign nationals is doing it, we can do it. And it's all great for everybody. Y'all have a good week, and we will see you again next week. Y'all have a good one.